Technological changes or advances have improved the impact of economic integration and connectivity among international banks. By improving data accessibility on borrower, guarantor, or collateral characteristics, it will pave the way for broader access to bank credits and new forms of securities, and improvements in risk management. The benefits of technological advances is at least partially offset the cost of doing long-distance business. Technological changes relating to telecommunications and data processing have spurred financial creativity and innovations, which add value to the bank products, services, operations, production, marketing, and financial procedures. Retail loan applications are now routinely evaluated using credit scoring tools, rather than using human judgment. Example: in Malaysia, the well-known method for credit scoring is FICO score, which rates applicants range from 300 to 850 points. The higher the score, the better. However, many banks still use their own method of measuring and determining credit score. The growing diversity factor can be in the forms of culture, belief, socioeconomic, ethnic, gender, etc. For example, Shinyan Bank. Shinyan Bank is a pioneer in South Korea finance, and they are committed to operate globally. Shinyan Bank decided to enter the Canadian market, and decided to choose Ontario's Greater Toronto area because of its cultural diversity, and educated and skilled workforce. There are several advantages of growing diversity and having a diverse workforce. First, it drives economic growth. Second, growing diversity enabled banks to capture a greater share of the consumer market. Third, it enables the firm to recruit a more qualified workforce. Fourth, it can avoid the employee turnover costs. Employee turnover cost is usually defined as the cost to hire and train the replacement employee, as the previous employee left the job. Fifth, growing diversity could foster a more creative and innovative workforce. Sixth, firms can be more competitive in the economic market. Seventh, it creates a competitive economy in global markets. And lastly, the growing diversity moves the country's economy forward. Economies of scale is doing things more efficiently with increasing volume or speed of operation. This refers to how a firm can focus on reducing the average per unit cost of its products and services, by increasing the scale of production for a single unit of product. In other words, it lower cost per unit of production as capacity increases. Now let's discuss the common sources of economies of scale. The first common source of economies of scale is wholesale and retail distribution. Increasing the speed of operations, such as order fulfillment, could lower the cost of both fixed and working capital. Second, through the purchasing, the bulk buying of material through long-term contracts could lower the purchasing cost. Third, through managerial, which is increase the specialization of merger and acquisition. Fourth, in financial, by obtaining lower interest charges for borrowing, and having access to a greater range of financial instruments. Fifth, marketing, spreading the cost of advertising over a greater range of output in media markets. Sixth, technological, by taking advantage of return to scale in the production function. There are two kinds of economies of scale. First, economies of scale that arise from increases in the production of individual products, which are called product-specific economies of scale. Second, economies of scale increases in all of a firm's outputs, which is called overall economies of scale. Next factor on the international banking growth is conditions in host countries. Conditions in host countries seem to have influence on foreign banks' decision as to whether to establish a branch or a subsidiary. Countries with greater economic risks tend to attract subsidiaries of foreign banks, rather than branches. The reason is that subsidiaries allow banks to ring-fence any losses before they spill over to the parent institution. Meanwhile, expansion through branches could imply better protection against political risk. Subsidiary bank is a foreign bank that is incorporated in the host country, but is either wholly owned or owned in a major part by a foreign parent bank. This bank needs to operate under the host country's regulation. Banks expand internationally in order to allow them to find the optimal balance between return and risk. Thus, in order to satisfy investors' demand for a higher return on equity, banks tend to extend lending to countries that offer a high expected economic growth. In addition, revenue maximization has motivated banks towards countries with a liberal policy, relatively developed, and not too concentrated financial system. There is evidence that macroeconomic and financial stability in host countries become an important force to extend and form of foreign bank lending. Other than that, currency risk has proven to be a key factor of cross-border banking for developed and developing countries. In terms of regulatory environment, it can be seen in different types of countries. Under the comparative advantage, the success of a bank on how they effectively incorporate a host country's characteristic into its business model determines its comparative advantage. For example, countries with an underdeveloped institutional environment attract institutions that are used to operating in such an environment. From the bank's perspective, non-economic factors like cultural and geographic proximity help them to choose the location of their affiliates. Cultural proximity has been found to foster cross-border bank merger and acquisition transactions by reducing both the informational barriers to entry and reducing the complexity of diseconomies factors. There are four main areas of comparative advantage were highlighted. First, industrialized operations. Second, in delivery transformation. Third, return on capital. And fourth, asset protection. Under the industrialized operations, due to the economic downturn, some bank management has reduced the cost doubly in order to protect margin. Moreover, the continuous client dissatisfaction has forced bankers to reconsider their approach at a service level. For the delivery transformation, it can be seen nowadays that a number of initiatives are done among banks on their consideration on investing in mobile payments. It is found as an important effort to rationalize the bank's overall technology infrastructure to better support the kinds of front office digital services. Meanwhile, for return on capital, banks are likely looking for growth opportunities in their preferred areas of strength, and under the asset protection, one area that appears to be increasingly important is the need for more effective technology for risk management. Bank management should consider taking action to protect the operational stability of their operating outlets. The last factor of international banking growth is efficiency considerations. Efficiency considerations have a connection with the scope of economies. There are two types of economies of scope. First, global economies of scope, and second, product-specific economies of scope. Under global economies of scope, it is important to see the difference between joint production and separate production. It occurs when total costs of both joint production of all products in the product mix are less than the sum of the costs of producing each product independently. Meanwhile, the product-specific economies of scope arises from the joint production of a particular product with other products. If production efficiency can be increased by adding a particular product to a given product mix, then this type of economies of scope exists. We have completed the factors of international banking. Please read the textbook for detailed explanation. Thank you.